TPD as well. I mean, do you want to talk about like why that's a 7.3 months? That's kind of a long time.
Sounds scary, but if we think about what you're claiming for, the event that's going to give rise to a claim, it's total and permanent disability. So most insurers, if you read into the PDS, will say, if you're still totally and permanently unable to work after 3 to 6 months, and it does depend on the insurer, then we can assess you for TPD. But if you think about, okay, maybe you have a major accident and temporarily lost your ability to walk, or you suffered some other injury, and at that time, this is major, this is forever, and your life changes. But things can change, and maybe you hear a lot of stories about, I was told I'd never walk again, and then generally it's going to be years, but that person pushes through and learns to walk again.
Hey there, thanks for watching another deep dive. Today I've got one of our superstar advisors, Matt. Thanks for joining me.
Most welcome, good to be here.
So today we're going to be talking about claims. So all things claims. We're going to be talking about, average claims, acceptance rates. We're going to be talking what the process is. So let's kick us off, Matt. So let's start by talking about what are the top 3 reasons people make claims on these personal insurance covers.
So just to sort of ease us into it, we've broken it down. So life cover, TPD, trauma, income protection. So number 1 for life cover is cancer. And this is all age groups, males and females. And when you do break it down, it gets a little bit different. But second one, cardiovascular at 25.86%.
What's cardiovascular?
So anything to do with your heart, really. And then the third top reason for claim is your respiratory system at 14.03%. And then the list goes on from there. But rather than go right into the weeds, we thought we'd stop at 3. For TPD, number 1, mental and behavioral, at 24.86,
which is climbing as well. That wouldn't have been anywhere near as high 10 years ago, but it's climbing rapidly.
Yeah. So all these stats are also based on just the last 10 years as well. So if we sort of brought it down into last year, I'd say you're right, that would be a lot higher. So number 2, accidents and injuries at 23%, and then bones, joints, and tissues at 16%, which will probably somewhat fall into accidents and injuries for some of them, I suppose. If it's bones?
Yeah, I guess it's more like chronic issues and chronic injuries that force someone not to be able to work.
And then moving on to trauma, we've got, and no surprise here, cancer, number 1 at 63% of all trauma claims. Cardiovascular, number 2 at 24.17%, which again, no surprise at all. And then other makes up 4.98%. So what that means is the smaller categories all combined to make up about 5% of those claims.
Yeah, that's huge. The big numbers. It's like 85% is cancer and heart-related issues. There's not too many people in Australia who would be walking around and go to a family event or a friend's event and not know someone who's suffered a cancer event. So that's no surprise.
Yeah, one of the insurers released a white paper probably 2 years ago now. It's been a while. And this was version 2 of that white paper. I think in version 1, the chance of suffering cancer in your lifetime was 1 in 3. By the time version 2 came around, it was 1 in 2.
And that was literally like 4 or 5 years apart.
Yeah.
Like it wasn't very far apart, those 2 papers.
No, it's really scary. I think I'm super risk averse because of what we do and how often we see these things happen, and just seeing these claim stats as well. But yeah, scary. And then wrapping up, income protection. So we've got accidents and injuries at 52%, bones, joints, and tissues, 10.31%, and then mental and behavioral at 9.4%. So that's another one that I think if we were to shorten that time period down from 10 years to the last couple, mental and behavioral would probably be number 1.
Yeah, again, it's a bigger percentage than it ever was. And we've done a lot of videos and deep dives about mental health, and it's a massive topic in insurance and sustainability of insurance. Talking about mental health. So it is a big percentage of claims when it comes to like those working covers, so income protection and disability. So next kind of point is, we all get told that, hey, insurance companies, their main aim is to not pay out claims. And so one of the great things about working in life insurance is the regulator, APRA, they release stats I think they update it like literally every 6 months on the claims acceptance rate. So tell me, Matt, do these insurance companies that we work with, do they actually pay out these claims?
No, never. It's a total scam. No. They really do. And thankfully, this is public data as well. So if people are actually keen to, look at these stats and kind of see that we're not just pulling them out of the air, Money Smart life insurance claims comparison tool, you can Google it, you'll find it. So out of all of the insurers, we're looking at life cover claims acceptance rate of about 97%, TPD at 83.8%, trauma at 85%, and income protection at 95% of claims accepted. So very, very high. And that's the average as well. So there's some insurers will show slightly higher and some are lower, but overall across the board, if you told me I had a 95% chance of something happening, I'd be pretty certain that it's probably going to happen.
90, 97 and, all of these numbers, 95 for income protection. Like, why isn't that 100% of all claims paid out?
Yeah, so there's a few reasons. One report we got from an insurer recently, they had about 10, I think, and their period was over the last 12 months, and they had 10 that weren't accepted. And they listed that the main reasons for that were someone was actually applying for claiming, and it turns out they did have an exclusion for the thing they were claiming for. So either they just thought, let's give it a go anyway, or they forgot that exclusion applied. Potentially a non-disclosure at time of application. So insurers do look into the medical history, and if they happen to see something that should have been mentioned at time of application, that may cause issues. If it's quite a severe thing that really should have been mentioned, it was not an accident, or I forgot I had a sore knee 2 years ago. Or finally, the claim just didn't meet the definition. So like trauma, for example, they have very specific diagnoses or events that are clearly defined. And so if it doesn't meet that, unfortunately, the insurer isn't there to just give away money. They do have to really make sure it meets that definition. So things like, pneumothorax is obviously going to be defined, but that's a collapsed lung. And so that's really traumatic, but it's actually not one of the conditions covered under trauma.
Look at you go, bringing out the big words, pneumothorax. Part of me was just about to say, what the bloody hell is that?
Yeah.
But I'm glad you clarified for me.
I bring it up because I was looking through a PDS the other day, and I saw one that says,
just tell us all why you're an insurance geek. Yeah. Lean into that. Let's
trust
go.
me, it was for a client. I wasn't reading it before bed. I think it was a pneumonectomy. And I was like, what on earth is that? And it's actually a lung removal. And so that prompted me to kind of look into what that means. And going on to, meeting the definition, you can get a trauma payout if you're burned, but it has to be at least 20% of your body and on a certain scale, which is a huge amount. Doesn't sound like a lot, but 20% burns is not good.
There are some, like, talking about trauma, there is some really clear cut, easy, stage 4 cancer where you're getting paid all day, every day. And that's why it makes up a huge percentage of the claims. But there are some nuances with the thing. We actually had a client who was claiming on trauma, and their condition didn't meet the trauma benefit amount. And so it was a good example of, as an advisor, we want to put the claim in because we're not medical practitioners. We're not going to say yes or no. We may as well submit the claim and get the insurer make their full assessment. It's better for the client to do that because there are some things that are questionable whether it is claimable or not. And that's why it's not 100% claims acceptance rates, because as advisors, we want to, we're not here to make fraudulent claims or waste anyone's time. If we think that maybe a claimable event, we'll submit the claim forms in, and then there could be a decline. Fortunately, that situation was very favorable. We got a great outcome for the client. We got a partial payment, even though they didn't meet the definitions. So that was, very generous from the insurance company to pay out some of the claim. But yeah, there is good reasons why 100% of all claims aren't paid out when it comes to these policies, because we will go and apply for cover. Or sometimes income protection, if they haven't met their waiting period, we may submit the claim early, expecting them to be off work for longer, but they actually return to work earlier, and then we can just pull the claim forms. But the insurer still needs to log it as a declined claim and all of these things. So they still go to APRA. So that's why not all of them are going to be paid out. So talk to me. One of the great things about the Money Smart website, you said, is you can look between the super fund policies and a financial advisor policy. Now, one of the things I don't love about the Money Smart website, which I had a rant before we hit record, was that they don't talk about the average sums insured and the average claim amounts that are getting paid out. So talk to me about that. What are the average payments that are getting paid out on these policies?
Yeah, so on that site, you can select the type of cover you're looking at and then whether it was taken through an advisor, through a super fund or direct, and it's got stats for each, which is quite handy. But yeah, so again, we'll stick with a kind of life TBD trauma order, I suppose. So average claim through super fund for life cover, 134,000, compared to the average life insurance claim through an advisor, 510,000. So big difference there. As for TPD through the super fund, average claim amount 145, and then through an advisor 664,000. I'll leave trauma to last actually, but through the super fund, average income protection claim monthly benefit $4,000, and through an advisor around $8,000. Then finally, last but not least, trauma through an advisor. I'll switch the order. $258,000 average trauma claim through a super fund, $0.
Wow.
So,
why is that? Why are they not paying out anything?
well, you can't get trauma in your super fund to begin with, so you probably best compare with the direct. But even then, there's not too many providers that do offer trauma direct to consumers who generally need to get it through an advisor.
Yeah, so there's sometimes a question we get is with this Money Smart website, and we show these stats on. Oh, do we still put it in our advice documents?
Not the new version.
No, not the new version. Okay. We put a link to it still to go, hey, look at these claim stats. There is a question that we sometimes get. Why does the super fund have a higher claims acceptance rate than through a financial advisor? Now, that trauma conversation I just had is if we're helping clients with a claim, we may push it through the insurer and let the insurer decline or accept the claim. But talk about some of the other policies. Like, what are the reasons super funds may have a higher acceptance rate?
So I think one thing as well is just about when things are actually accepted. I mean, if we think about how often people come to us and say, I've had this event, I'm struggling financially, and we go, that's a claim. And they've gone years not knowing that they've had a claim opportunity that whole time. So I think if you're unadvised and you maybe don't even know you've got that cover, or it's there, but you don't think it's bad enough, you just don't even lodge. So the only people lodging with those super funds are really bad. I mean, one, they're much lower levels of cover. They're default levels of cover. So typically when you're over 25, your balance is over 6,000, you just get an amount of cover that the super trustee has determined is enough for their members. But they don't ask any medical questions, any pastime questions. Whereas if you've gone through an advisor, you've got fully underwritten cover. It's really painful to get it at the start because they ask you a million questions about your health, about your family history. What are you earning? What do you do for a job? What do you do on the weekends? Whereas the super fund asks none of that. So they don't have those typical exclusions on those lower levels of cover. And there's no kind of look backs to see, okay, did this person tell the whole truth when they sort of signed up? Is there anything that they've completely left out that they shouldn't have? And, if it comes across your desk and you've got the choice between paying out 100,000 or 500,000, you're going to look a little bit deeper into the 500,000 because it is a lot more money.
Yeah, and that's right. The disclosure is a big thing. Like, there's no non-disclosure because that's not a requirement for those group policies within the super fund. And yeah, just in terms of a claims assessment, it is easier, and that's why if you think $134,000 for the life insurance component is enough to cover you for the need, then great. That group covers, you may be suitable. 99.99% of all Australians, that's not suitable levels of cover. So if you want to increase it, then you've got to go through that medical disclosure process, whether it's through the super or not through the super, or through a financial advisor. All right, so let's talk about claim timeframes. Like, again, we've got some great data from the regulator about what are the average claim timeframes.
Yep. So starting off with life average, and again, each insurer, there is a breakdown on their website. Life cover 1.3 months, TPD 7.3 months, trauma 1.5 months, and income protection at 1.6.
Yeah, and the reason why this is important is because when we're thinking about going through the claims process, it's not just a we'll submit the claims and we're all good. We get it sorted tomorrow. Like for some of them, it's fairly straightforward, but they just got to go through the process. Like we may submit a claim for like a life insurance policy, but we've still got to wait until we get the medical reports and the death certificates, and all of that stuff can just take time. Claims, we submit claim forms, but we still need biopsies, to prove the condition. We still need some medical reports to prove the conditions before they will fully accept it. So that is why there is a lag. TPD as well. I mean, do you want to talk about like why that's a 7.3 months? That's kind of a long time.
Sounds scary, but if we think about what you're claiming for, the event that's going to give rise to a claim, it's total and permanent disability. So most insurers, if you read into the PDS, will say, if you're still totally and permanently unable to work after 3 to 6 months, and it does depend on the insurer, then we can assess you for TPD. But if you think about, okay, maybe you have a major accident and temporarily lost your ability to walk, or you suffered some other injury, and at that time, this is major, this is forever, and your life changes. But things can change, and maybe you hear a lot of stories about, I was told I'd never walk again, and then generally it's going to be years, but that person pushes through and learns to walk again. So the insurer just needs to make sure that it is a total and permanent disability, not something that looks really bad for 3 months and then there's a miraculous recovery in month 4, and then they've already pocketed the TPD payment.
And I had a call with a client this week, actually. I think it was yesterday or 2 days ago. Anyway, doesn't matter. It was this week. And carpal tunnel the client has, and it's really severe. She's been off work for 18 months. And we were talking about a TPD payment because she has an own occupation TPD policy, which means can she return to her work again? This client's an osteo, so it's obviously requires your hands to do that work. And we could submit a TPD claim today, but the permanency is what's going to be required. And this client's gone through a number of surgeries. It hasn't gotten better, not in a great way physically, still in a lot of pain. And so we could submit the claim today and it will probably go through the process. But knowing the insurance process, it's going to need to wait until we can kind of have an idea of this is a permanent thing. It isn't just one surgery away from getting fixed. Yeah. And the client's really hopeful as well. Clients, they want to get better. They want to get back to work. The conversation was, I've got a massive HEX bill. I've got a huge HEX debt to study to be an osteo. I want to be an osteo again. And so the client's hopeful to get back to work. So for us, it was just a conversation going, hey, this is just on the cards to think about. If it is something that you cannot go back and be an osteo about, yes, you got to deal with the kind of the emotions and the grief that will cause. But there's likely to be a TPD payment there because it's an own occupation TPD. So again, if we submitted the claim today, it would be legitimate, it would be accepted by the insurer, but they'd want to see that permanency, which could take another 6 months before we get there. So we've made the call. We'll wait until we kind of a bit more comfortable with the likelihood of an acceptance before we submit the claim.
Just to avoid having to lodge it or, constantly just check in again and again if everything's required from the insurer.
Yeah, and the client's on income protection claim, ongoing income protection claim. So the insurer is fully aware of the condition and where the client's up to. And so next up, let's talk about like what is the process to claim? Like how does it work? What do clients need to do if they think they might have a claimable event?
I think if you have an advisor or you know of one that you trust, just reach out to them. And like, especially if they helped you set up the insurances or they've been managing them, definitely reach out. And they can just ask you a couple more questions about what has actually happened, when did it happen. They can have a look at what policies you actually have and just do a quick assessment on, the rough estimate on or chance of claiming and being accepted. Or they can tell you, look, this is major, totally understand it's life-changing, but doesn't meet the definition for the policies that you may have.
Yeah. And so I think it's important to talk about like two different types of claim scenarios. So like I like to kind of put them in buckets like simple claims and then more complex claims. So the simple claims are things like, generally simple. Nothing's ever simple in this life, as we all know. But generally simple is things like trauma insurance. You either do have cancer or you don't have cancer. The stages will matter and how early has it been picked up and all of those things matter. but they're generally easy enough to understand, whether it's a claimable event or not. Things like life insurance couldn't be simpler. Are you dead or are you not dead?
Yeah.
And so that's relatively simple. Short-term income protection policies are normally, if you think you're going to be off work for 3 months and you've got a 1 month waiting period, great, we can submit that claim. And then there's a more complex claim. So long-term income protection and disability. So talk to me about like what makes those type of claims more complex than the simple ones.
So, I mean, just going back to the TPD, with the carpal tunnel, is it actually going to be permanent? Is a really big part of that. TPD, you need 2 doctors to actually sign off that they don't think you'll ever recover, because that's a huge component in assessing that claim. They do rely on the doctor's opinion. And yeah, with the income protection, it gets more complex because it's not 3 months in, or you've met your waiting period. This is what's happened. I can't work today. The insurer goes, great, here's your money. See you when you turn 65 or when your benefit period ends. They do want to keep checking in and make sure that you are still sick or suffering from what has happened and you're still eligible for that claim. And they may also look at things like, are you back at work partially? So are you doing 10 hours a week? And then if you are, they can still keep paying you, but maybe not as much. So maybe they're paying you 5,000 a month, you're earning 1,000, and they reduce their 5,000 by whatever they deem as.
Okay, so hold on a second, Matt, you're confusing me. You're saying I can be on income protection claim, but I can still work. How does that act? Like, tell me more about that.
Yeah, so income protection, thankfully, is not as cut and dry as you're either working or you're not. There are partial claims. So there are some circumstances where you're not totally unable to work, but you can still get paid something through your income protection. And there's generally, if you're nerdy, if you want to read through a PDS, the insurers will typically have a formula in the very end of the PDS, so 110 page mark, that shows, okay, if
That's like that 2 a.m. mark for you.
when you've got one eye open.
Mm.
And it shows if you're eligible for X, and it's a really funky looking formula when you look at it. But you're eligible for X. This is how that's worked out. But then you're working, so then this gets involved, and they show you how they calculate that. So you can also get a rough idea of, okay, if I'm working 10 hours a week, that should be this much income. Take that off what I'm getting paid. So I should be getting about this much from that insurer.
And talk to me about what type of claim, like if I'm working, I can work full time, or if I'm not working, I can't work at all. Like what type of claims were we talking about that means I can work some of the time, but not all of the time?
Fatigue is probably a really big one. So mental health, or potentially even in pain. So a couple of years back, and I've just got to talk from my own experience, I herniated a disc. That was fun. And for about 2 months, I was actually working from my bed. So I was lying down. I didn't even think about kind of going, I can't work. I just made a plan and kept doing it. But
You
really,
weren't at Skye at the time.
yeah,
Skye would have said, "Chill out, Matt.
yeah. Right.
Don't build some contraption where you can lay down and keep working." So just
Yeah.
so we're all aware, this is not Skye being forcing you to get to work.
This was pre-Skye, and we don't talk about that. We don't talk about Bruno.
Yeah, I was going to say you're definitely a father of the little one. If you bring up, we don't talk about Bruno.
But that may have been the case, and for me it was 2 months, thankfully, and then I started to improve. So for the 30-day waiting period, so there may have been a potential for claim there, but I didn't worry about it because I was working, I was still earning, so I didn't see the need to do it. But those sorts of things where, maybe due to pain, you can work a little bit, but pushing it past the 5 hours a day or 2 days a week then means, things start to spiral from there. So you keep it there where you're doing your best to get better, and maybe you gradually try and push it to where you're working more and more. But when you know that it's going to make things worse, you just call it there and get that top up from the insurer.
I mean, there's a lot of things like chronic fatigue. We've got clients with, claiming and got chronic fatigue. And so we've got a client who's been on claim for, over 2 years now with long COVID. And the symptoms of it is chronic fatigue type symptoms, and still on partial claim. So, still not fully able to return to work full time. because of the symptoms. And so they're the type of things. And yeah, physical things. It's like, well, if you've hurt your back, I can go back to work maybe 4 hours a day, 3 days a week. Great, you'll get paid for that accordingly, and then the insurer will top up your income. So it's even those physical events at the end of the claim, trying to progress back into the workforce. It doesn't have to be all or nothing when it comes to these claims for income protection. So I've got some frequently asked questions for you, Matt. First one is, when I go to a claim, do I just go to a lawyer to help me claim on it? Do I go to an advisor? Do I just go to the insurance company directly? Like, see all these ads to get a lawyer to help me with it. Why don't I do that?
It all comes down to how much of that claim proceed you actually want to keep for yourself.
Okay, tell me more.
So you can go to a lawyer, and there are plenty of lawyers that advertise for that. But we'd probably encourage firstly reaching out to your advisor if you have one. If you don't, or for some reason you don't feel like that advisor is gonna help with that, there's also companies called claim advocates, which I'll get into in a little bit. You can go direct to the insurer, but realistically, if you're in a claim scenario, your focus should really be on getting better. And if there's anything you can palm off to someone else, just do that. So advisors are going to be in your corner. They'll do as much as they possibly can to make that process just as easy as possible to understand, and then just take on as much as they can to ease whatever they can in that period of time. So lawyers may need to get involved if it's a more complex claim, with that TPD, maybe they're fighting an any versus own occupation, or, a definition on the level of cancer or something like that. Yes, there is space for them, or a major dispute about the outcome. But me personally, and this is not reflective of Skye, lawyers should probably be the last resort in the claim process if you think it's relatively straightforward.
Yeah, I agree. I mean, I will speak for Skye. 100%. The go to lawyers last, because you don't need to. It's just unnecessary. Lawyer, I don't know if anyone's dealt with a lawyer. They charge like wounded bulls. They do a great job for what they're needed for, but for insurance claims, they're generally not needed for a lot of the time. Now you can go to the insurer and get declined, and then take that to a law firm to help advocate for you if need be. It's just not the first point of call to go to, because they charge a lot of money, and they're very, very expensive. A lot of law firms do a percentage of claim amount for lump sum claims, and it may be reasonable and okay if it gets to a point. But the great thing about these insurance policies, it isn't a claim and get declined and you can never claim again and never fight it. If you have a case and it is you've been wronged, and the advisor who you're working with doesn't have the skill or capacity to be able to fight that claim, then great, let's engage lawyers. And if you're working with an advisor, then they'll make the introduction with the next step as well. Like we talk about it at Skye, we help our clients with claims. But if there becomes a complexity of something that we don't feel like we have the skill or capacity to be able to do, because we set up a lot of insurance policies, we do a lot of the work up front, but the actual amount of claims that we do is growing, and there's a decent amount. But really complex, nuanced claims, that's not something we do day in, day out. But we would probably first go to a claims advocate day in, day out. They do really complex claims. And then if we do need to take it any further with the dispute, that's when the claims advocate will then introduce a lawyer to go, actually, we probably feel like this is reasonable to bring in another party. So yeah, I'm with you. You may be a bit more diplomatic than me, Matt, but I'm less diplomatic. All right, next frequently asked questions. If I claim, will I pay more for my insurance premiums in the future? Like that's a fear that a lot of people have.
Thankfully not. So you're not a car. You don't get a booster for having more crashes. So with life and TPD, generally they are kind of one and done claims. There's some circumstances where you can, if you claim on TPD, reinstate life, but you won't get more expensive because of something that's happened or purely because you've claimed. With income protection and trauma, where you can potentially claim more than once, again, they're not going to increase that cost. With the types of insurers that we deal with, there's nothing that can happen once your policies are in force except a a non-disclosure at time of application that's fraudulent, that can make your policies worse. So even if it's a health event or you've changed your job and the insurer is told, and it's not a claimable event, they can't then say, oh, now we know this, we're going to charge you more because you're in a risky occupation, or you're not as healthy as you were, so now we're going to add smoker rates or a BMI loading or exclude this new condition that you have. So short answer, no.
Yeah. So in your situation, Matt, so you talked about a number of years ago, you could have been off work for 2 months and a doctor would have signed off on it, totally fine. The reason you didn't make a claim wasn't because you were worried my premiums are going to be more expensive in the future. It was probably, you wanting to make sure you didn't put the business out, no doubt. But it was also just a matter of income protection won't pay you as much as your actual income at the job. So sometimes it is a conversation of, do you really rest, recover properly, or push through? And my advice, always rest, recover, make sure we're looking after ourselves mentally and physically. But the reason I bring that up is it's not a fear that, I just don't want to have a more expensive premium in the future.
No, not at all. And it also wouldn't have meant clearly I had a back issue. Wouldn't have then meant I couldn't claim for my back again. If it flared up in the future, I could claim again and again and again. But yeah, it was mainly around just
be diplomatic here.
Not wanting to let anyone down, but also I felt I could work okay, and it just was natural to go, I'll just lie down and work and put my screens above my head. But looking back, I was on a huge amount of painkillers and all sorts of nasty things that, looking back at the time, I felt okay. Looking back, I was like, I was in no state to work. So if it did,
I mean, you spoke gibberish to all the clients when
yeah.
And you thought you were perfectly communicating.
Yeah, what's that? It wasn't quite the Wolf of Wall Street scene where he's trying to get back in his car.
Okay,
but no, I was definitely not, the way I normally am. And there's like a lot of it I just don't remember, which is scary.
Yeah. Right. Even better than why you went to work.
Yeah.
All right. Next question. Next frequently asked question. If I have a claimable event, can I just claim on one of these policies, or can I claim on multiple?
You can claim on multiple. And again, it comes down to what's happened and whether or not that fits into each of the different claimable or claim types or benefit types. With an example that we give is a stroke. So stroke typically or commonly claimed on under trauma, because it is one of those covered conditions. So that'd be the first one to claim on, because there's no sort of waiting period or can you work or not. You've got the report that says you suffered a stroke, and that to the insurer, you should be being paid pretty soon. A couple of months down the line, okay, you maybe lost the ability to walk or talk, and you're unable to work because of that. So at that point, you've probably hit your waiting period, and then you start claiming on income protection. That continues, you're potentially working a little bit or not at all, going to rehab. 6 months later, you're not improving. You still can't walk or talk or whatever has happened. Then you're in the realm of claiming on TPD. On top of that, a successful claim on TPD, so a total and permanent disability, also doesn't mean that your income protection ongoing payments will then stop, unless you're with a particularly specific super fund that does stop that. So again, shout out to default insurances. But yeah, that means that your ongoing income protection just can meet your, day-to-day needs, food, housing, medical bills, rehab, whereas the TPD payment can then go, okay, I had that massive medical bill, got to pay that off, maybe clear off a HEX debt, or we still got a massive mortgage. Let's just wipe that out and be free.
And so if I can claim on multiple covers, why don't I just get like one, save myself some money?
Well, again, they don't all cover the same thing. So, in that example, if you just had TPD, so you just go, look, I only want cover in the worst case, I can never work again. You may still suffer a stroke. You don't have trauma. There's no claim there. Maybe you don't work for 6 months and then things start to improve. If you've got income protection, high chance you'll be able to claim something there. But if you've only got that TPD, and even at the 3 to 6 month mark, you're starting to improve, you may not be able to claim on that TPD, because the doctors are then going, well, we can see this improvement. Let's keep trying. Maybe a year from then, you're completely recovered. So in that case, you missed out on the trauma, you've missed out on the income protection. And if you swap any of those benefits, it depends on what's happened. You can just miss out. And they all work together to kind of bring you back to health and financially look after you. And unfortunately, no one type of cover covers everything.
And I think, kind of one of my big takeaways when it comes to claim and doing a lot of the claims work, we've got Courtney and Ruby in our business who do a lot of that work, but I get involved when I need to. A big kind of takeaway for me is just most people read the PDS back to front when they need to claim. That's really when people are experts on their policy. Up until then, they're just like, oh, I'm sure it'll cover me, it'll be fine. So with these claimable events, and we're talking about claims a lot, it is very dependent on the policies you hold. And that is, dependent on a whole bunch of factors. So it is really important, like TPD, we're talking about that. We did a deep dive about like, there are some, definitions of, are you unable to return to work again or unlikely to return to work again? So that stroke scenario, is a doctor going to write down saying you're unlikely to return to work or unable to ever return to work again? Like they're very important, differences between the contracts, and no one wants to do this deep dive research when they're setting up a policy. We expect it to kind of work as expected, but it is super important to engage a financial advisor who does this work and who has experience with claims, who has experience with setting up different policies, and has a relationship to help you out with claims, because that's really when the rubber hits the road when it comes to these policies. We all pay a boatload of money, and the best scenario is that we never claim on this and the money's just lost. Happy days. I've paid this money and I've protected my family and I didn't need it. The second best scenario is you pay a whole bunch of money and the money's there, paid out to you when you need it. So as we wrap up, is there anything else that you think that we, haven't touched on, or you think is really important for us to finish up on?
I think probably the one to really drill down is, don't be afraid to reach out to the advisor to just ask general questions, even if it's not about claims. Just, hey, it's been a year, forgotten some of what we talked about. What does this actually mean? Like, if you're not sure. And then if you do think you need to claim, even if you think there's a small chance, just ask. Because the worst thing that can happen, even if you go through, you fill out all the forms, you go to your doctor, you get a report, you submit everything to the insurer, the worst thing that can happen is they say, no claim. And everything continues as it was. There's no downside. There's no long-term impact on what you can claim on or the cost. So just ask.
Yeah, and our process is we just book in a phone call, 15-minute phone call with someone in our team, either myself, another advisor, or Courtney in our team, to just jump on and just have a discussion about what your policy is, how does it work, is this a claimable event? And as in your situation, you had income protection, you worked in advice, and you didn't really think about claiming on it. My wife was in hospital, had meningitis. And like only 3 months later did I go, oh, was that a claimable event? And I looked at our policy. It wasn't, because it needs significant, cognitive impairment, which fortunately for Kate, it wasn't the case. But I did think, damn it, we missed out on the 300K trauma policy, but that's okay. And so, people just don't think about these things. It's not the first thing you think about. So if you have had a medical event, anyone watching this, if you had a medical event, just think, oh, is that actually claimable? And jump on the call with either someone in our team or the advisor who set it up for you. It's really important just to touch base and go, because there's so many of those claims that have happened, but the claims haven't been submitted because people just don't think about it.
You don't need to be in a hospital bed to claim. I think going on from what you were saying, that was kind of my thinking is, I'm working, lying down, but I'm still working. So there's no way I'll accept it. I just decided to try.
Awesome. Hey, Matt, appreciate your time. This was a great episode. It was a really in-depth deep dive. If anyone has any questions about claims, about insurance, as you've heard many times in this episode, Matt loves reading PDSs. So he's happy to answer any questions and spend time reading PDS to get you the answer.
Cool. Thanks, Phil.
Thanks, mate.